Good morning. Welcome to the 8th Anakazi Banking Online Conversations. My name is Mwila Pascal Mwenya, Regional Debt Capital Markets at Stanbic, Zambia. Our conversation today centers around capital markets in Zambia, and our distinguished guest is Phillip Chitalu, who is the CEO of the Securities and Exchange Commission, SEC. Phillip, thank you for coming for this conversation. Phillip, welcome to Stanbic Zambia. Thank you for coming to speak to us.
Thank you.
I suppose the only place to start is from the capital markets. Can you give us a brief history of the capital markets in Zambia? That way we just demystify the whole conversation for our online viewers.
I think speaking to capital markets, one cannot run away from starting with the financial sector. Capital markets is one of the three segments of the financial sector. So you've got your financial markets, money markets controlled by the central bank. You've got your other markets such as the insurance and pension funds that are regulated by the Pensions and Insurance Authority. And of course, you've got capital markets where the SEC comes in. Now, as the name suggests, capital, we really are a market where businesses can actually raise long-term capital. So in terms of Zambia, the formalization of capital markets goes back to 1993 when the first Securities Act was passed by Parliament. But I'm glad to say that 2 years ago, I think 2, 3, 4 years ago in 2016, a new Securities Act was passed by Parliament to make changes to the developments that have happened in the capital markets in the last couple of years. I think it's more modern. It speaks to the things that we are seeing on the market now. For instance, your digital and similar kind of activities that happen in the financial sector space. So we basically regulate capital markets through the use of the Securities Act of 2016, number 41. So in a nutshell, without boring anyone, I think that's a summary of capital markets.
All right. Thank you for that. I suppose everyone has a bit of an inclination and knowledge around the capital markets and what they see in terms of international capital markets, whether it's the JSE, the Dow Jones, and so on. But from a local perspective, what is the current state of the capital markets in Zambia? I'd love to hear your thoughts, and I'll share mine as well.
Oh, sure. For your information, actually, we've been tracking capital markets. We've got a 10-year index which tracks the performance of capital markets. And by capital markets, we have we use the performance of the Lusaka Securities Exchange, and then we track the performance of that market against, for instance, somebody investing in dollars, and you can have a dollar worth 5 kwacha, maybe 5, 6, 7 years ago, it's worth 18 kwacha. So we're really trying to track and see if somebody had invested on the LUSE versus investing in a dollar or kept dollars in an account, where would they be? We've also looked at the performance of the treasuries, your government bonds and the treasury bills. We're also thinking of marking that against property kind of returns. Now, for the last 10 years, the performance of the capital markets has been superior, but we've noticed that in the last 9 months, the performance of the capital markets is gone down, and obviously it's reflective of the activities on the market, because capital markets doesn't operate in a vacuum. It does get affected by the macro situation of a particular environment, and this environment I'm talking about in the case of Zambia. With your inflation going up, investing long term becomes of concern to most of the people, because then you have your capital eroded within a short period of time. And then the stability of the exchange rate is very, very key to the performance of capital markets. Because if I bring $1 million in the economy, how much do I take out in 12 months? If the exchange rate has moved against me, and if I did not hedge, then I would have lost out. So there are all these other factors that get to affect the performance of capital markets. So we really have to watch our inflation, We watch the performance of the money markets in terms of the returns on the bonds. And of course, we have to watch the exchange rate. It has to be stable to encourage people to invest for the long term.
I agree with you there. And just to add my view on what you've mentioned, in my mind, if you have healthy and functioning capital markets, it becomes another indicator, another barometer for the economy, which can be used to court whether the economy is performing well, whether the economy is performing badly. And so it's very, very important that we have a capital market that's robust enough for the index to be used as a barometer for the economy. So for instance, in Zambia, I think we've seen the growth of, let's say, Stanbic's PMI, the Purchasing Managers Index, almost as an economic indicator that stands out there. And then you've got the dollar kwacha relationship that you mentioned, which is also seen as part of sort of an economic indicator. But what's missing there is the index, the Lusaka Stock Exchange Index, which should be, or Lusaka Securities Exchange, as it's called now, which should be there and looked at as a first-line indicator of whether the economy is heading this way or that way. And from your perspective, obviously you're tracking the secondary market activity,
yes,
and so on. What are your thoughts on the primary aspect, the primary market activity? Are there enough primary market events coming to market?
I think in the last couple of months, years, the only activity that we've seen, especially in the primary market, and speaking to the securities issuance, we've only had one IPO, which was done in December and listed in January. This is Zafico, which is the country's forestry company, if you like. It did perform above expectations in the sense that it was issued in a very, very depressed market. But I'm glad to say that the subscription was above 96%, if I'm not mistaken, which is a very, very good indicator of the appetite of good assets being brought onto the market. But when you're talking about capital markets, if I may just backtrack a bit, we shouldn't just restrict ourselves to shares, because in the capital markets, debt instruments should and can be issued as well. We have had a few debt instrument issuances in the last couple of years, but this has been affected by the performance of the government bond and treasury bills, because if the rate is good there, then you're really competing with government in terms of raising finances. With the yields above 25%, then that means the private sector person trying to raise money has to beat government, has to offer more than that rate. And the market has this tendency of pegging issuances to the treasury bill rate, which is a very, very short-term view of capital markets. Capital markets should be for the long term, and pegging it against the treasury bill does not do justice to our economy. But again, you will understand why the market has adopted such a short-term view, because of the stability of the factors that I talked about, the exchange rate, the inflation, and other factors.
Agreed. I think there's been a lot of focus on equity when thinking of the stock exchange, and very little focus on debt. And if you look at it from a global perspective, the debt market is usually much larger than the equity market.
Exactly, yeah.
But in Zambia, it's the inverse, where the equity market is larger than the listed debt market. With that in mind, I've often thought that perhaps apart from the primary market issues of what price you can issue your debt at, because everything is pegged to government security, there's always the secondary market lack of liquidity in debt. Whereas historically, you can go a whole year without having a secondary market trade in any listed debt.
Yeah.
And I think that's where the Securities and Exchange Commission and other financial institutions like banks should be able to come together and put some kind of legislation or some kind of framework that allows for secondary market pricing. Because I think that's the part that's missing. There are secondary market trades, especially in government bonds. That happens quite a lot. Corporate paper, obviously, no, because and so on. But if you could price the corporate paper in the same way that government paper is priced in the secondary market, in that there's bond calculators and there's an actual way to benchmark, right? Then you could get that uptick in corporate paper trading. But it's a balancing act, and I think all the players in the capital markets, including to a certain extent the insurance entities who hold government paper, should come together and be willing to not only issue paper but sell and buy paper for corporates.
Yeah, I think for us, Pascal, the secondary market activity is very key in the sense that it signals your activities in the primary market. I always give an example of if I were to buy a car that I could later on resell on the market, I have to look at the secondary market. And I give an example of a Toyota Corolla, not endorsing any car, but if you want to sell your second-hand car, no one beats I think a Toyota Corolla. A Mercedes-Benz, it's good, but then the market is limited. So what I'm saying basically is for you to sell your second-hand car does affect the primary activity. So you have more people buying Corollas so that they can sell them when they're tired using them. The same thing actually happens in the capital markets. So in trying to raise funds, only those firms whose securities can trade in the secondary market are likely to raise funds in the primary market. So if you're trying to do a good test, just go to the secondary market and see how well a particular paper is selling, and that signals how well it do in the primary market. So that said, we've started compiling statistics, especially with our issuance of a directive late last year, I think mid last year in July. And I'm glad to say that quite a number of banks that are heavy or the largest traders in terms of secondary market bonds, government paper, are actually giving us statistics on a monthly basis. And in the not too distant future, we should be able to publish the prices, and that should be able to improve liquidity, because then people will be able to know the price of particular securities. That should aid in decision making, including for pension funds. Because if you're a pension fund manager and you're trying to buy in the secondary market, what price do you think would be a fair price if there's no official pricing kind of board where you can actually benchmark your prices? So we're working towards that. But I also wanted to further extend our thoughts whilst we're discussing about discussing capital markets. We've talked about securities, which are usually referred to as shares, but securities is general. And the definition of securities in the Securities Act includes things like I've said, bonds issued by both the government, which is the central government. It could be issued by a municipality, or pretty much by corporate entities. But within the capital markets, we also have a retail sector side of it, which is collective investment schemes. And this should excite most of the people, more so maybe some of our audience, the ladies, the women. Instead of putting money in risk things that we keep seeing on WhatsApp and other social media, collective investment schemes are regulated pools of funds. Since they are regulated, it becomes easier to actually get your money out instead of lending it to an entity that you barely know. So we normally actually get to encourage people that before you put aside any money, whether a lady, a gentleman, and in between, you actually need to ask people for their license. Banks such as yours are certainly registered, so they're dealing in legitimate products, and the people's money will be secure through banks such as yours. So those are the three main aspects of capital markets in Zambia. The shares traded on the Lusaka Stock Exchange, including the government bonds, but then there's also another aspect of collective investment schemes.
Noted. And that's actually very correct. People should start seeing the stock exchange as an avenue to safeguard money and to get a return. But that said, what is the way forward? I mean, we've got a stock exchange that's like you're saying has been in existence since 1993 when it was established. Probably the first trades were in 1994.
Yes.
So through that time, what we've seen is very, very vanilla instruments. We've got bonds or corporate bonds issued by corporates. We've got government bonds, and we've got what's very popular, obviously, equity,
Yes.
companies' equity. what we haven't seen, for instance, real estate investment trusts, REITs. We haven't seen exchange traded funds, ETFs, and I'm not necessarily looking at having a full derivative market. And I know that the word derivative can be a nasty word, especially if you're speaking to a regulator. But what about those kind of hybrid instruments? Are we putting in place legislation and a framework to help the stock exchange?
I'm actually, you more or less like preempting my thoughts and the thoughts of the Commission. The Real Estate Investment Trust is awaiting being put in a form that is acceptable to the market, but we've worked on that and we've made a lot of progress. So before the end of the next quarter, which is starting, I think, tomorrow, we should be able to have the REITs guidelines in place. And then we're also seeing a lot of risk in commercial paper because certain people are losing actually funds by putting money in commercial paper with all sorts of entities. So we are again issuing guidelines to see that commercial paper is regulated. That further reduces the risk or the exposure of the investing public. I think the Commission, working with the UNDP, has issued a green bond guideline and speaking to our environment, our climate, so it becomes easier for somebody to issue actually green bonds. And green bond is becoming very, very big in the sense that some pension funds, especially abroad, are willing to put into green projects. And now green does not necessarily mean just the usual ones that people think about, agriculture and the like. It could be energy. So you could do solar. Solar is considered green because it doesn't pollute the environment. So these are some of the products I think our viewers should be able to think through and see that they go to the market to raise a green bond to help with the energy situation, but also the drought situation that we've suffered. So if you were putting up dams, and if you can cleverly package it, dams to store water to be used in a drought situation, that could actually be allow you to raise money through the use of green bonds. So we have a number of exciting products. But my challenge is to yourselves, because we are just regulators. Products are supposed to be innovated by the market and for the regulator to see how safe these products are onto the investing public. So I'll throw back the challenge to the market. Yeah,
that is true, and obviously we are trying to be innovative and create products in the capital markets, both primary and secondary, in order to move the capital market forward. But in my mind, and this is leading to my next question, in my mind, the evolution of a capital market goes through 3 stages. There could be more, but these are the 3 stages that I've identified. First one is legislative, whereas the government or a regulatory body comes, makes a statement in a country and says, if you're a corporate of this nature, either for your license obligations, for you to be able to continue doing business, or for you to do certain things, you have to be a listed entity. Okay. And so the capital market naturally gets uplifted because all these entities have to list. They may not want to, but they end up listing. And that's how a stock exchange would start. The second phase would be incentivizing, incentives, whereas the treasury or the government comes up and says, you have tax breaks. If you're listed and you look in a certain way, your tax would be, 10% less than your tax band and so on and so forth. So it gives a motivation for these entities to list. And the last part is when a capital market is mature enough that entities list for either prestige or to raise capital.
Yeah.
Now, my question is, where do you think the capital markets in Zambia is? And if and wherever it is, what legislative changes do you think, or incentives do you think need to happen to give the capital markets a further boost?
I think that's a very, very good analysis, and your question is something we're trying to answer together with the market. So government through the Minister of Finance has set up a steering committee looking at a 10-year strategy to develop capital markets. So we are trying to come up with a capital markets master plan to ensure that we answer questions such as the ones that you're asking. And speaking of the draft document that I've had occasion to read through, we're trying to answer questions around what's the relevance of capital markets. So you have to go back to your national development plan and see whether capital markets could actually help raise funds to target specific economic sectors. I think that's where we're starting from. So we shouldn't just have capital markets for sure, but capital markets should be relevant to the economic situation. So this committee, which is headed by the Secretary to the Treasury, is looking at those questions, and stakeholders actually encouraged to give insight into where they think capital markets should be going. But in terms of talking about the stages that you did mention, of course we've got a law already in place, but then there's a question, a very, very big question that we need to be answering as a country. Should capital markets be a business decision when you're speaking about registering and listing, or should it be a legal position, like you said? Should actually the government, for instance, say all banks needs to be listed because they handle public funds and the public have an interest to ensure that banks are run in a particular way? Should we have specific economic sectors compelled to list? I think that's a policy kind of decision. And unfortunately, I'm not here. I cannot speak on behalf of government in terms of policy. I think that's a policy decision, whether to copy what some countries have done, where sectors of what we call sectors of public significance are actually compelled to list for the purposes of transparency, and also to ensure that such economic sectors have an input from the local people, as it were. But that's up to policy kind of decision. What we're looking at is the strategies of using the existing policy positions and using the law to ensure that capital markets are developed. But then we may actually step back again and speak about listing, which we call public markets, versus unlisted, which is probably your private kind of market, where private equity comes into space. So when we're really speaking capital markets from a regulatory position, we're talking both public markets, like the LUCE, and private markets, like your private equity, which most of the banks actually do participate in. So the development of capital markets is a combination of the two factors. So when we speak capital markets, we really need to be careful what we talk about. I'll give you some insights from a survey that was done by the same consultants that are helping us do the capital markets master plan. In a 4-year review, there was actually $280 million raised in Zambia, or for Zambian entities, through private equity, which is a private markets, right? In the same period, only $10 million was raised through the issuance of securities in a public market. So you can actually see that if we are looking at the size of activity, $290 million in a 4-year review period, and probably 90% of that is actually private equity. So from the securities point of view, we are encouraging both, not just the publicly listed securities, but raising of capital through any means authorized through the Securities Act. So we really need to be careful how we define capital markets.
That is true. And ultimately, there's need for capital.
Yes.
Everywhere. And capital will always follow the easiest route, right? Or will try to follow the easiest route. So with that in mind, with such a large gap of capital raising in the private space and the public space of almost 280 million difference in a 4-year period, what would be driving that difference? Because obviously there is a need for capital. Is it whether perceived or not? Is it the extra costs or perception of extra costs if you go to a public listing?
Mm-hmm.
Or is it speed of execution between private and public? Is it documentation? Maybe there's a view that you have more documentation in the public space. And lastly, is it the thinking that the capital that's coming in or being raised in Zambia doesn't have a preference, and that brings in the pension funds and the PIA and what role they're playing in your discussions?
Yeah.
Are those agencies making it viable for public fund managers to have a preference between public and private?
I think what we get to see is, and again, it's an innovation that the market needs to bring to an economy such as Zambia. I think we are more than certain that over 90% of the business entities are SMEs, and they are structured in a way that is not suited for public kind of markets. Because you normally find your kind of family businesses where maybe it's just husband and wife. Usually what you see is 70% shares owned by husband and 30% by wife. And then these guys get to make decisions on what we call a breakfast table. So they're not really willing to go into the public arena where their business methods, their business plans, their cash flows, subject of a public kind of a scrutiny. So with 90% of the entities being SMEs, we do not see, unless there's a drastic change, that these 90% of firms are likely to list. But then these 90% firms need funding. And that's where your sector as players on the market come in. How do we go to the public markets to raise funds and maybe then on-lend them or on-invest into these SMEs that need funding? We did a survey, I think, 4 years ago, speaking to the 4 largest banks, I think including yourselves, where we found that you have on your books quite a number of SMEs that need funding. But they have exhausted their funding parameters in the sense that they need fresh shareholder funds in order to access, for instance, working capital from a bank. But then how do they access, how do they improve this shareholder fund part of their balance sheet? I think that's where banks and other players come in to see how we can structure the market. Maybe we can have 4 or 5 big funds that regularly raise money from the market, and then because they understand the parameters or the working culture of the SMEs, they go on and on lend. So in Zambia, we may not have 1,000 listings. We may have 5 listings, 10 listings, but these listings get to channel funds to the economic sectors that we're talking about. There are a lot of women-led businesses that require funding, but they may not qualify to come to the capital markets in their present state to raise funds. But they can come to a bank. They can go to another financial intermediary and raise these funds. That's what we should be talking about. Okay. How can we have a transparent firm that can raise funds, poor funds, and then on lend? I think that's what we're looking at. You actually get to see, like you said, there are quite a number of pension schemes and collective investment schemes in that space that are investing in private equity, because that's just the nature, I believe, of our economy. Our economy is full of SMEs. We do not have large firms that are likely to list. Your Zaficos are only limited. They're only a limited number. So we have that thing, and that's the setup of our economy. So we have to make do with the setup of our economy in terms of raising funds and channeling them to the funds to the productive sectors of our economy.
Right. As we sort of go to our conclusion, in the world we're living in, I mean, we cannot have a conversation without mentioning the global pandemic, COVID-19.
Yeah.
What themes have you seen since the pandemic broke in Zambia? Have you seen any themes that are touched the capital markets?
Yes. I think there were conversations and there's been activity about the government raising a COVID bond. I'm sure that goes straight into funding sectors that may be affected by COVID. But then what we need to see, just like talking about green bonds, I think this presents an opportunity to the private sector to actually come up with products that speak to specific sectors of our economy that have been affected by COVID. Now, in terms of the way the law is couched, it's in a general kind of format, because it did not anticipate that there would be COVID and then it speaks to a specific COVID kind of situation. But our law, especially if talking about bonds or raising debt kind of instruments, you could actually pretty much call it anything as long as it confirms and conforms to the specifics within the securities market. And we're seeing this in other countries where specific funds are being raised on the debt market, especially in order to actually get to help the struggling firms in the private sector that we actually need for our jobs. Because job creation is the most efficient way of income distribution. Once people have jobs, then they can buy their own medical services, they can buy their own food, and pretty much anything you can think of. So helping raise funds to achieve or to alleviate the suffering of our people from a COVID kind of situation becomes the capital markets and any financial sector kind of activity. So I'll throw back the challenge to you, the market, to come up with the products and then come to the SEC. We can have conversations and see how best that could be done. Because it also speaks into the social aspect. So you may actually excite some pension funds that may want to participate and see that the social aspect of COVID is actually tackled through capital markets. So we have our doors open, although we may have to meet you over Zoom until the situation actually changes.
Now, thank you very much, Phillip, for taking the time and giving us those insights into the capital markets in Zambia. Thank you. That was Phillip K. Chitalu, the CEO of the Securities and Exchange Commission. I have to say we're lucky to have such a distinguished member of the capital markets come through and give us our insights into capital markets. The capital markets in Zambia are not a mystery. They're open for business, and they're open to help entities, whether large, small, or medium scale, to raise capital. And the avenues will be there, and financial players will create instruments. So with that in mind, thank you and stay safe.